Good evening. I hope you all had a fantastic weekend and a great start to your week. First and foremost, I would like to wish my sister a happy 31st birthday. I love you very much and hope you had a fantastic day. Getting to the day of trading, markets rose as tech, specifically Microsoft and Apple, led the way up and managed to have the Nasdaq finish at a new record high close. The S&P 500 gained the least of the three major indices, as it gained 0.72%. The Dow gained a better 0.89%, while the Nasdaq gained the best 1.47%. Factories across most of the world increased their production during the month of July, but were still held back due to weak global trade action, which looks to continue. This has caused manufacturers to save costs by cutting jobs. Export orders were weak across many countries and even contracted in the large exporting countries Japan and South Korea. In the U.S., two surveys of purchasing managers showed improved manufacturing activity. In fact, the Institute for Supply Management's manufacturing PMI rose to 54.2 in July, topping a Dow Jones estimate of 53.8. Any reading above 50 signals an expansion in manufacturing activity, though data suggests that the easing of lockdowns may not even be enough to get global activity back to previous levels. This could mean that government action, such as spending on government projects, will be needed to keep some manufacturers afloat. The percentage of U.S. manufacturing companies in the Institute for Supply Management's July survey that were actively managing headcount through layoffs and furloughs was nearly equal to those that were hiring and expanding workforce. News broke that the Federal Reserve is considering abandoning their previous strategy of preemptively lifting interest rates to stave off higher inflation. This is a strategy that they have used for more than 3 decades. The Fed is considering taking a more relaxed stance and allowing periods of high inflation that would be slightly higher than their target of 2% inflation, as a means to make up for former periods where inflation managed to stay under their target. For a while now, the Federal Reserve has grown concerned about spells of low inflation that have bedeviled authorities in Japan over the past 2 decades and in Europe for the past decade. The change being contemplated now is a way of essentially telling markets that rates will stay low for a very long time. These changes would do little to support the current economy because most all investors are aware that the Fed is not interested in raising rates for multiple years. By raising rates based on a forecast of higher inflation, the Fed risks short-circuiting a labor market expansion when many of the most disadvantaged workers are finally getting jobs or raises. That could be costly if inflation doesn't materialize, according to Atlanta Fed President Bostic. Retail bankruptcies are continuing their ascent to their highest number in a decade. This year's retail bankruptcies currently tally up to 43. For comparison, in 2008, 441 retailers filed for bankruptcy. The latest retailer to file for bankruptcy is Le Tote, which is the owner of Lord & Taylor and Tailored Brands, and is also the parent company of Men's Wearhouse. Banks are beginning to make their lending standards more strict, even though the Fed is urging the banks to lend and there currently being a low demand for money. The Fed's Senior Loan Officer Survey also showed that foreign banks are also showing a reluctance to lend. The survey said, quote, major net shares of banks that reported reasons for tightening lending standards or terms cited a less favorable or more uncertain economic outlook, worsening of industry-specific problems, and reduced tolerance for risk as important reasons for doing so. End quote. The banks further cited weaker capital positions, less competition, and worries over increased regulatory burdens. Today's meeting between the Democrats and the Trump administration regarding the fifth coronavirus bill was said to be, quote, productive, end quote, by Pelosi, but she then stated that they still, quote, have our differences, end quote. Schumer added that, quote, we're making some progress on certain issues, moving closer together, end quote. The senator said, quote, there are a lot of issues that are still outstanding, but I think there is a desire to get something done as soon as we can." End quote. Both parties are still apart on many issues, but at least they appear to be moving in the right direction, as many are currently left without extra unemployment benefits. Tech clearly led the way upwards as the COVID champion gained more than 2.2% today. Healthcare and industrials also managed a strong day, as they each gained around 1%. Utilities and basic materials both performed the worst and fell nearly 1%. All baskets of stocks ended in the green today. Growth in small cap stocks managed to perform the best. The best performer in the S&P 500 was Varian Medical Systems, which makes a variety of cancer-related medical devices. Shares rose 22.04%, as it was reported that Varian has agreed to be purchased for $16.4 billion, or at a 24% premium compared to Friday's closing price, by firm Siemens Healthineers. The CEO of Varian said, quote, "In addition to delivering immediate and compelling value to our shareholders, the combination with Siemens Healthineers brings us even closer to realizing our transformative vision of a world without fear of cancer." End quote. The other good day was had by pharmaceutical company McKesson, which had shares rise by 6.49%. This great day was due to the company's earnings this morning, which had them beat non-GAAP EPS estimates by 38 cents, as they recorded a gain of $2.77 per share. Revenue was pretty much flat on a yearly basis, as the company recorded revenue of $55.68 billion, which beat estimates by $1.52 billion. The biggest loser was athletic clothing company Under Armour, which had shares fall by 7.38%. This comes after Friday's positive earnings, but these earnings were clouded by the grim statements made by the company's CEO, saying that revenue will continue to be very weak moving forward. The other poor day came from popular COVID play Carnival Corporation, which of course is the cruise liner. Shares fell 5.84% during trading today due to the coronavirus situation continuing to get worse throughout the world. Getting into earnings, we'll start off with Tyson Foods, ticker symbol TSN, which is a food company that offers a lot of various frozen meat products. This morning's earnings were mixed, but more positive than negative. Non-GAAP EPS beat estimates by 50 cents, as the company recorded a gain of $1.40 per share. Revenue came in at $10.02 billion, which was lower than estimates by $550 million, and represented a yearly decline in revenue of 8%. Shares ended the day up nearly 1.6%. Next up, we have Clorox, ticker symbol CLX, which is the cleaning supply company known for their Clorox wipes. Clorox had some pretty great earnings this morning. The company beat non-GAAP EPS estimates by 40 cents, as they posted a gain of $2.41 per share. Revenue was up an astounding 21.5% on a yearly basis due to the pandemic, which allowed the company to record $1.98 billion in revenue, which topped estimates by $120 million. All segments of the company managed to post double-digit growth. Ultimately, shares ended the day down 1.92%, as investors took profits after the company's astounding run. Next up, we have Take-Two Interactive, ticker symbol TTWO, which is a video game company that owns studios that create games such as Grand Theft Auto, Red Dead Redemption, and the NBA 2K franchise. Take-Two missed GAAP estimates by a large 41 cents, but still had a gain of 77 cents per share. Net bookings was up an absolutely absurd 136% on a yearly basis, and totaled $996.2 million for the quarter, which beat estimates by a huge $150.76 million. Currently, shares are up around 5% after the fantastic earnings report. Next up, we have Virgin Galactic, ticker symbol SPCE, which is a British spaceflight company who aims to send passengers on space science missions and suborbital launches. This afternoon's earnings were not fantastic, as the company had a loss of 30 cents per share, which was lower than estimates by 3 cents. The company announced that they plan to raise new funds by issuing 20.5 million new shares. On top of this, they said they expect to advance the next phase of its test flight program, with its first powered spaceflight from Spaceport America this fall. Shares are volatile but down big as of now during after hours. Next up, we have Chegg, ticker symbol CHGG, which is an online education company that provides book rentals, online tutoring, and other student services. Chegg had nice earnings this afternoon as they benefited from the shift to at-home education. Non-GAAP EPS ended the quarter at a gain of 37 cents per share, which topped estimates by 5 cents. Revenue came in at $153.01 million, which was up more than an absurd 63% on a yearly basis, and beat estimates by $16.41 million. Shares were up more than 3% during after-hours trading. Next up, we have Cirrus Logic, ticker symbol CRUS, which is a semiconductor company. These earnings were pretty good. Non-GAAP EPS finished the quarter as a gain of 53 cents per share, which was better than estimates by 23 cents. Revenue was up a slight 1.8% as the company recorded revenue of $242.6 million, which was better than estimates by $17.35 million. Shares were up big during the day, but are currently in the red after the earnings report. Lastly, we have Realty Income Corp, ticker symbol O, which is one of the most popular REITs as it is known for its monthly dividend and invests in single-tenant commercial properties. The company had very good earnings, especially when considering the current business environment. They beat on funds from operations estimates by 4 cents, as they had an FFO of 86 cents per share. Revenue managed to be up by 13.4% for the real estate company, as they recorded revenue of $414.6 million and ended up beating estimates by $57.83 million. The company also announced that they were able to collect 86.5% of their contractual rent for the quarter and 91.5% during the month of July. They even said that they invested $154.2 million in properties that are currently under development. Shares are up by around 1% after the positive earnings. That is all that I have for tonight. I hope you enjoy the rest of your Monday, and I look forward to seeing you again tomorrow.